Joining us this morning to discuss what is brewing in buyouts is Credit Suisse's co-chairman of M&A, Stephen Koch. Good morning, Steve. Good to see you. And, we've all been kind of scratching our heads. Generally this time of the month, it's the end of the summer, things are slow, and suddenly we've got M&A heating up. What gives? What is going on here?
Well, it's clearly people who aren't too happy about having all their August plans ruined. I think we're in probably the busiest August I can remember in many years. Mm-hmm. And, there's two things going on, Betty. We've had a pretty good, steady, consistent M&A market for the last probably 6, 9, 12 months. It's been going on at a pretty consistent rate. There's been a good level of activity across a bunch of different sectors. And then, as you know, the M&A market is sort of a lumpy kind of phenomena. So what happens is you have a couple of large deals get announced or happen to happen when they do. They happen to come about in August. Mm-hmm. So you have things like Sanofi and Genzyme or BHP and Potash, or the little bidding contest that's going on in the tech world. And, that gets interpreted as a big boom going on. But the truth of the matter is, there's been a pretty consistent M&A market. You happen to have a few deals go on that get a lot of media attention or really catch people's eye because they have a little bit of flash to them. Right. But really the truth is, for the last bunch of months, I think the M&A market has been getting healthier and healthier. You've been seeing good, steady activity, kind of thing we like to see. And other than the sort of volatility in the equity market that tends to get people a little nervous from time to time, we're in a pretty good market environment. Is it changing from what you've seen in the people that you deal with? Is it changing the way CEOs are now looking at their business? I don't think that so much. M&A is a long-term investment that people make. So when you buy a company or you're choosing to sell a company, you're making a major strategic move, you're making a move that people are thinking about what's going to happen over a bunch of years. Right. So you're not necessarily that affected by what you see in the market at any given moment, by the sort of day-to-day vagaries of the equity market or the bond market. Okay. What you're looking for is sort of long-term secular changes that are going on. What we've seen, particularly in North America, is as the economy begins to get a little healthier, people get a little more confidence about where their business is going to be for the next several years. They see some visibility as to where the economic environment is going. They may be a little nervous about what's happening in the very near term, in the next month, 2 months, 3 months. But they're looking out and they're saying, we've hit bottom a couple of years ago. That was an incredibly ugly period we went through. But Steve, they're starting to build confidence, and Steve, you see people make long-term investments. Right. But quickly tell me, though, what do you make, though, that some of these deals, these big ones that you're talking about, have gone hostile? Well, it's interesting. It's sort of, if you look over the last several booms that have gone on over the last 20 or 30 years, the M&A cycles that happen, a leading edge indicator of an M&A cycle starting up again tends to be hostile deals. Because what happens is sellers aren't that happy about selling at a given price. Where they see the market, they think this isn't the best time to sell. But as buyers tend to heat up and get a little more interested before sellers become interested in selling, you see a bit of a hostile trend emerge, and people begin to do deals that maybe not on such a consensual basis. Okay. So if you look over time, it's usually an indicator that you're going to see an M&A cycle start up again. Right. And it's sort of the early form of that. Okay. And Steve, before I leave you, I've got to mention, though, that you're about to step off this, speaking about hostility and no hostility, you're about to step off the grind of the daily work life, and you're about to go cycling across the country for charity. We had to hold this up. You're in biking shorts there, so a good luck there for you, Steve. But I know you're doing this for charity, so it's all for good. Yeah, we're doing it for a hospital here in Chicago that I'm on the board of. It's called cyclingforsinai.com. Okay, thank you, Steve.